We're live. We're live. Can you imagine that? Welcome, everybody. How's it going out there in crazy land? Because the whole world is going crazy. I'm here with Mr. Anarchist. I'm low on battery levels. Of course, low on battery levels. So let me plug in. Give me a little something to talk about for a couple minutes while I plug in my power. Mr. A.
I think we're going to talk about one of my favorite topics is money, specifically Federal Reserve, Bitcoin, cryptocurrencies. What does it all mean? A lot of people don't think about it.
Before you get going on all this, because it's really important, we all want to know what you have to say about the dollar, the future of the dollar, the Fed, and this cryptocurrency. And I heard recently, I'll let you go on this, and then maybe we'll put the crap at the end, all the advertisement bullshit. But I heard that our government is going to come out with a cryptocurrency. Did you hear that?
Well, if you call a central bank digital currency a cryptocurrency, I guess.
And go.
I guess. Well, we're looking at a new era, digital money. What we had before was operating on the dollar that most people just took for granted, didn't do a lot of study. I didn't do a lot of study until after the housing bubble. After housing bubble, I started looking into it a little bit, and I learned what the Federal Reserve is. And it's a very interesting topic. It's all the information's out there, easy to find, but basically going forward with the dollar before the Fed, it was not centrally controlled. A lot of different banks were able to manipulate their own little local currencies, and there was a lot of upheavals that came and went until finally in the early part of the 20th century that the Federal Reserve was enacted, and they were given the monopoly privilege on the creation of money, and in using the central bank as the sole issuer of the currency with the cooperation of the federal government, the Treasury Department, that they started out with what was already acceptable to everybody was a gold standard, which took a very long time for it to be accepted around the world. And then that was just something that was easily acceptable. Everywhere you went, everybody knew an ounce of gold is an ounce of gold as long as the purity percentage is the same. And so with that came the decision by the federal government, okay, well, there's going to be one show, and it's going to be this bank that is not really federal, but they have the control over the dollar. And so the dollar was different before this, and they kept the name dollar, so it stayed familiar with everybody. You keep the brand name the same, but you're going to change the ingredients a little bit. So they said, well, okay, from now on, $1 is going to mean that there is 1/20th of an ounce of gold deposited in the treasury, and that gives us the right to issue a dollar. So you'd have to put an ounce in to get $20 printed. And over time, that was working pretty good until World War II started rearing its head in Great Depression era, and federal government had a decision. They could either tax the people, not a good idea, borrow the money, where are you getting that? Or, well, we can change the formula. So keep the label the same, it's the dollar. But now we get to issue $35 for every ounce that we put into the old treasury. And that worked for a while, pretty good, up until late 60s, early 70s. They started going, well, this Vietnam War and all these social programs starting to really rack up the bills. We can either raise taxes, not ever popular, borrow the money, not really popular, or we can fuck with the formula again. And so they fucked with the formula and decided, guess what? We get to print as many dollars as we want, and we don't have to do the gold thing anymore. We're untethered now. There is no gold standard. It's fiat. It's money by decree. The government said this is what money is, and you must accept it because legal tender laws compel you as any merchant or somebody who engages in trade of the dollar, which is what everybody uses. That's the tool, the wonderful tool that was created to facilitate trade. It's money. And so, as legal tender, it's given the right by law to be exchanged. And so, it becomes what everybody just uses. It's the standard. And although they may have changed the formula, it's still the dollar to everybody. And that seemed pretty good for a while. But those of us who have lived a little bit have started to see that over shorter periods of time, you know that your dollar is buying less stuff.
Right.
And
That's
especially now,
that's
that's
inflation. That's the cause of inflation.
and
It's the only cause of inflation.
well, there can be, and inflation is a really sticky term that people can use it interchangeably for just the generic rising of prices or the inflation of the money supply, which invariably will lead to the raising of prices. So when you see something like what just happened with the COVID pandemic or after the housing bubble, a large amount of new dollars are put into the supply. It was not required anymore that they need to put gold first and then create dollars. So by just need and desire, by fiat, by decree, there is the ability to just create more supply on the market of the dollars. So anybody who understands the littlest simple economics of supply and demand, well, there's always going to be pretty much the same supply for this tool to facilitate trade, a dollar, but they have the monopoly on the supply. So as they increase the supply of it, what happens is the purchasing power, the ability for you to buy the same kind of stuff tomorrow that you did yesterday and today. Over time, you can see, I don't know if you can see that or not.
I'm sure they can. I can't. I'm sure on YouTube they will. On a big screen they will.
If you look up any chart of the purchasing power of the dollar over time, go back to right when the Federal Reserve was created in 1913, when they were stuck to a 20-to-1 gold to dollar standard, and then moving forward all the way to going off the gold standard until today. That chart represents up until I believe April of this year. Yes, April of this year. And the purchasing power of the dollar is a pretty steady 45-degree angle downwards in your purchasing power, meaning the same $100 that you had a long time ago doesn't buy as much today as it did back then. And then the other line that you see, if you're looking at that chart, is the purchasing power of Bitcoin. Much shorter period of time, much more dramatic rise because it hasn't been adopted as any kind of a real standard by very few people. It's not the easiest thing to come to understand, but I'm going to try to make this as simple as I can. Buckle up. I think I'm going to need a drink before we go on a little Money 101 lecture. Let me see if I can do this real quick.
Blockchain. What is it?
Oh, yeah. You're getting way too far ahead. We're just going to talk about money first. Principles of money is this. Money is just a tool to facilitate trade. Nobody really wants money. They want what it'll get them. And there are intrinsic properties of money. Money doesn't have intrinsic value, whether it's gold or dollars or Bitcoin or anything else that you're using to facilitate trade. There are certain intrinsic properties. And these properties you want to be there to make it better money, to make it sound money, as they say. Here's some of these inherent properties. You want it to be acceptable, widely acceptable. You want it to be divisible. So yeah, a dollar can be divided down into a bunch of pennies.
Right.
You want it durable. Over time, is this coin or this bill or this gold bar going to be able to sustain the elements and time going forward? Portability. Portability. Can I take it wherever I need to go? Can I put it in my pocket, or do I have to put it in a big cart behind me? It's not good when you have to lug around a lot of this stuff to have a good amount of value. You also want there to be a uniformity of value and in the appearance. So wherever you go, you want people to recognize it. Oh, yes, that's a coin of those
Right.
people. It says so right there.
Mm-hmm.
You also want it to be fungible. That means like every unit, no matter whether you divide it in half or 100, a unit is a unit is a unit as you go down the chain. Also, you want it to be a limited supply. Now, that before we became a fiat currency was fairly well known that the supply was limited based on the amount of gold that was put into the treasury on deposit already. And you may have run a fractional reserve, which means, yeah, we can print 10 times more than we actually have in there, whatever your percentage is. But it always had to be first based in some kind of a limited supply, which gold is limited. There's really only so much that's out there.
Mm-hmm.
The limits of how much the government wants to create over time, just look at the base money, monetary base, the M2, they call it, of over time, how many dollars are out there. And the amount is just staggering that over time, millions became billions, became trillions. It's unbelievable at 10,000 times exponential over a short period of time that the dollar's been around 110 years under Federal Reserve watch. Another thing you want it to be is a legal tender. If it's legal tender, then whatever government you're under is going to recognize that is acceptable, and it's going to compel businesses and other people to accept it in trade. You want it to be recognizable, so when you see it, you know, oh, yes, I know that. I'll accept that because I just saw it. I've seen a million of them. Really, no problem.
You said that.
You want it to be a secure. So you also want it not to be able to be counterfeited. The U.S. is constantly trying to do a race between them and the counterfeiters to make sure that the dollars are secure, because it would be easy for a foreign government to flood the market with counterfeit bills if they never changed the security measures. Bitcoin has great security measures. It's been hundreds of billions of dollars that hackers can't hack it. Governments can't stop it. It's been around well over a decade.
That's
stability.
A good point, right?
I'll compare the two between Bitcoin and the dollar on each of these real quick. That stability, you also want it to know that, like, yeah, it hasn't had these upheavals up and down. Bitcoin does have that as a problem. But if you're looking at it from the sense of, well, yeah, it may be unstable, but its purchasing power keeps going up over short periods of time. In the long period of time, it's still going very much up. So are you worried about the stability if it's your wealth in assets of Bitcoin over a year or maybe 2 years that you might suffer if you've seen a good trend in this asset of very high returns over short periods of time? And that sounds very scary when you say it like that. That is like, oh, that sounds too good to be true. Be skeptical. Do your own research. So getting back to the properties, the intrinsic properties, not the intrinsic value, which it should be linked, but people manipulate the terms, is you want it to be a store of value over time. Bitcoin has not been around long enough to really prove itself to be a store of value over time. We're hoping that it gets there. And the only thing that's going to prove that out is going to be time and returning back to that stability factor that people want to know, that I want to be able to run a payroll. I want to be able to order items that if they have to take a week or 2 weeks or 5 weeks, that it's not going to drastically shift one way or the other in the exchange rate, because it would have been maybe better if I'd have waited and bought it from somebody else. So moving forward, as you understand that these are the things you want as a money. But as we've seen, looking backwards over a good long history of the dollar, you can faithfully say going forward, and this has been the mission statement of the Federal Reserve, they want to control inflation and have it around 2%, 3%, every year. And we all know that it gets out of that a lot, and it rarely goes under. So they're telling you, no matter what, our goal is to keep eroding the value of your dollar 2 to 3% every year. And that doesn't sound very scary until you start understanding what compound interest does over time. That's that chart I showed you, a 45-degree angle sloping downward year after year, decade after decade, well over 100 years of this label on the dollar that they've continued to tinker with the formula. And the next thing they're going to have to do so that they can continually manipulate it very quickly to keep up with all the things that go wrong in the world so that they can pump up markets here and slow it down there. They need these levers of control, and they need them to have to happen fast. They found out in the housing bubble how scary it was that it was happening quicker than they could keep up. So now their goal, and they're open about it, is they want a central bank digital currency that will be the legal tender, that you will be compelled as a business, as somebody who has payroll, as a bank, that will be the thing you'll have to accept. It isn't saying that you no longer can accept the old dollar. Yeah, we'll still accept that, but they might sunset it. They might say, yeah, but we're going to start making it harder and harder over time for people to be able to have physical cash. We want it digital. I mean, really, why is everybody so resistant to digital? Do you still like your vinyl records, hipster? Do you like the CDs? Do you watch VHS? No, you probably are streaming your stuff. You're using digital. You're watching this on digital. Almost everything in the world is digital, but that doesn't mean that all that stuff is gone. It'll still be there. But they're taking it over to move to the 21st century, finally. And that's just a natural consequence. I think Bitcoin is kicking this up to where they're going to have to do it, because everybody who wants to make a dollar off of Bitcoin, whether it goes up or down in the financial industries, they love the idea of seeing those charts of how that's been going up like 80% in a short duration of time. It's a $600 billion asset, just Bitcoin. And the SEC, Gary Gensler, I think he's still head of the SEC. He's very familiar with Bitcoin and cryptocurrencies. And Bitcoin and cryptocurrencies all operate off of either proof of work or proof of stake. Bitcoin is a proof of work. Just like when it was gold, you had to mine, you had to expend energy before you got the thing and you could create the money. You had to put an ounce in the treasury before you got the $20 bill out. Well, they changed it and it became fiat to where it was proof of stake. We have the stake. We own the bank, just like these other cryptocurrencies. They just print it out, pretty much most of them. It's like stocks. They're already considering it. Most of them are securities, because anytime they want, they can issue more. Just like the central bank, they can issue more. There's no need for the proof of work. Bitcoin requires a large expenditure of energy that people bitch about how much energy it creates and how much it costs and all the fossil fuels and everything. But do you want your money secure, or do you want it really easy to print by one group who's been given the legal monopoly by politicians? Do you trust politicians, or maybe do you trust code? Do you trust your devices, the technology behind these things that can be audited by millions of people around the world? They can check the code. All of these programmers. Do you trust the shadowy people in the central banks of the world, especially the Federal Reserve, the politicians who will disappear behind closed doors, who won't answer direct questions, who give you doublespeak and bullshit you all through their whole career? Who are you going to trust? Math? Or are you going to trust politicians? The code has been attacked over and over and over. It's a honeypot for any government to try to shut down Bitcoin. They've tried. They can't. It's decentralized. That means that unless you can shut down millions of servers around the world all at once and forever, that's the only way you stop this code. But you can shut down a central bank during a war, maybe. You might have, oh no, it's a bank holiday. Sorry, you can't get your money.
Right.
But guess what? As long as you got electricity, as long as you got internet connectability, which, thank you, Elon Musk. One of the few things that I think is so amazing and wonderful is that Starlink. If you're in one of those areas, all you need is a $500 box, I believe it is, and you can get internet connection all the time. That's it. One-time fee. You're always connected. And even if it wasn't for that, do you like the odds that the possibility that the real threat to your money, if you trust in Bitcoin, the threat to my money is they might be able to shut down the internet everywhere all at once for everyone forever? Because as long as one person has that code on a server, it'll have everybody's transactions and we can reboot that back up. And there you go, pal. There's your money. It's right there. We have proof of work. People work their ass off to keep this system going, to keep the code viable, to make sure this network works. And they're not together in this. It's not some cabal behind the scenes who are elitists, who are all billionaires, who all went to the same universities and the same fraternities and dine at the same country clubs and all that shit together. The good buddies, you know, they're all in it together, and you're taking it every year after year after year after year. Maybe it's time that you look at their track record and audit them.
Hey,
audit Bitcoin, audit
Mr.
everything. Don't trust anyone.
Thanks for your input, Art. Thanks, buddy. Next time, man. Next time, Mr. A. Peace.